Bitcoin's price movements are often unpredictable. However, on-chain analysis can offer valuable insights. One such indicator, the Bitcoin risk-off signal, recently flashed a historically bullish signal. On May 5, 2025, this signal plummeted to 23.7. This is its lowest point since March 27, 2019. Such a low reading has historically indicated a reduced risk of price correction. It also suggests a high probability of a significant upward price movement. The last time this signal appeared, Bitcoin was trading around $4,000. What followed was an unprecedented rally. Bitcoin's price surged by an astounding 1,550%. It reached an all-time high of over $68,000 in 2021. While history doesn't guarantee future results, this precedent is hard to ignore. It suggests that Bitcoin might be on the verge of another significant price surge. The current market conditions, however, are different. Bitcoin is not trading near $4,000 despite the similar signal. This discrepancy requires a closer look at the factors shaping today's Bitcoin market. Understanding these factors is crucial for interpreting the signal's implications accurately. The Bitcoin risk-off signal isn't based on mere speculation. It's derived from a combination of 6 crucial on-chain and exchange metrics. These metrics provide a comprehensive view of market sentiment and risk appetite. They include downside and upside volatility, exchange inflows, funding rates, futures open interest, and market capitalization. Each metric contributes to understanding investor behavior. For instance, high exchange inflows might indicate increased selling pressure. Conversely, high open interest in futures contracts might suggest growing bullish sentiment. By analyzing these metrics collectively, the risk-off signal provides a nuanced picture of market dynamics. A low risk-off score, as seen currently, typically suggests that the market has already absorbed potential selling pressure. This indicates that the downside risk is minimal, and the market is poised for an upward movement. However, it's crucial to remember that on-chain signals are not foolproof. They are most effective when used in conjunction with other market indicators and fundamental analysis. The Bitcoin market in 2025 is significantly different than in 2019. Several key developments have reshaped the landscape, contributing to Bitcoin's current price stability. One of the most significant changes is the launch of the first spot Bitcoin ETF in 2024. This landmark event opened the floodgates for institutional capital. It allowed institutional investors to gain exposure to Bitcoin through regulated investment vehicles. This influx of institutional money brought much-needed stability to the market. Furthermore, Bitcoin's volatility has decreased considerably since 2019. This is partly due to the maturing market and wider adoption. Lower volatility allows the market to absorb large capital inflows without drastic price swings. Additionally, increased regulatory clarity and Bitcoin's growing acceptance as an inflation hedge have strengthened its position. These factors have collectively established a higher price floor for Bitcoin compared to 2019. Beyond the risk-off signal, other bullish indicators are emerging. The Macro Chain Index, or MCI for instance, flashed a buy signal for the first time since 2022. This index accurately predicted the $15,500 bottom. Historically, its RSI crossover has preceded significant rallies. Furthermore, favorable futures open interest and funding rates suggest a potential break above $100,000. This confluence of bullish indicators paints an optimistic picture for Bitcoin's price trajectory. However, it's worth noting that Bitcoin's network activity has declined recently. This is evident in the reduced transaction volume and fewer daily active addresses. The number of unspent transaction outputs, or UTXOs, has also decreased. This suggests waning demand for block space. While this might appear bearish, it doesn't necessarily invalidate the bullish outlook. Reduced network activity could be temporary. It could also indicate that large holders are accumulating Bitcoin, anticipating future price increases. The current market dynamics present a unique scenario. The historical significance of the risk-off signal, coupled with positive macro indicators, suggests a potential for significant price appreciation. However, investors should remain vigilant and employ a balanced approach. Combining on-chain analysis with fundamental research and risk management strategies is crucial in navigating the ever-evolving Bitcoin market.